So from last year, from April low, if we can count as in one, two, up in three, which is 20, which is 261.8% extension, down in four to the with the war, right? So this was tariff, this was war, and this shows five completed waves of a one higher degree. The other count that I have, I always have to remember you have to have two wave counts. If this is a completed five waves of a one higher degree, then this one sets for a larger setback here. I don't know. It can depends how much and how this correction will go. So it will do for an ABC or WXY. The wave two can be either an ABC or a complex. That's it. There's no other way. Okay. So this one, the major support here on this one is a 7,000, which is this high right there. Right. So your major support always going to be where you have a largest percentage decline. So the largest percentage declines that we have was here, right? And the ones before that on the entire degree was right there. The rest of them were like all little waves. So it's too early to say anything. I mean, this could be just the third goes here. This one kind of, can push and make one more high. Anything is possible. But in summer now, I mean, are we all these memory stocks and I mean, it's hard to say over a one weekly candle. I mean, you need to see a bit more price action. But again, everything starts from a daily chart first, right? If the daily triggers a sell signal, if that sell signal holds, and if the daily swing starting to flip like turns down, that will over time will start hitting the weekly side. The weakness shows in a daily chart first, but the real trend is always the weekly chart, not the daily chart. So, but we'll track both of them. If look at that channel support, it's just crazy how it um, when you use wave two low and four and project it up to the wave third, and look where the top was is formed right there up at the top. So this suggests here a three-way move up in a higher degree. The second one is this one, which is ending the wave one here, making a higher degree to this war. When the war set place, that's to the low here. So this suggests a smaller one too. So either or one of them is going to be right, I know for sure, but it's just a matter of like how deep this thing is going to go. If it's going to extend deeper, then we will know this is a one higher degree. And if it's going to behave in in a smaller ABC, then we'll just stick with this one. There is pad. There's upside. There's plenty of upside here. So the reason all these wave counts, like lately I've been showing you a bunch of, I've been working on, did this one, God, on some of the stuff I did, some of them are like blank. No, it's not here. I thought I did done this one. I've been doing some, God, which was which on it. This one is another one. That's the one I did it this week. That's the high degree monthly wave count. This is what I'm looking at. I want to show you something first here. That's how you match wave counts with Gann. And always remember that there's nobody has ever combined Gann analysis with Elliott Wave. You see, look at that. This market, this is the reason that I've done a few of these cycle degree wave counts is because of this I'm looking at. So whenever this is all of one that we're in right now. Keep that thing in mind in a higher degree. Whenever we have a setback in a second swing, the third one is going to come after that. So your height, I mean, you should not, nobody should be ever concerned about that there's no upside in this market. There is plenty of upside in this market. This is telling us here. Look at this weekly. This is all of one full swing right now. This right there is the April sell-off with tariffs, and this is the war. These are all higher lows and higher highs. Whenever we have a set, this number is the number of the ATR, so you don't have to worry about that. But you just have to look at the numbers like how the swing goes. We're only in one across the board. This is 11 on a weekly. This is on a seventh, the NDX. This is why I start looking at on a bigger time frame. Look, SMEs, that's all of one. To me, there's some crazy upside in this market in the coming years. You know, we'll we'll worry about that later. So when I all of these wave counts when I make them and when I post them and over time, like how well they play out is just because I take the swings from the Gann side and then I literally plot them over into a wave count. That's why the wave count is going to work over time pretty well because the both of these different strategies they're working side by side. The both cannot be wrong at the same time. That's the that's the secret sauce. You can't just simply rely on a one single wave count and then you just label it the way you feel like it. But it just when you combine it with Gann at the same time, that gives you the timing and everything. So that's why the wave count is it plays out really well over time. This is starting back down here in 60. I know because this is where far the data goes. I mean, it could be, I mean, 19, if we go down here to 1950, it could be at 30 something. So 25, 30 points down here, really not gonna make too big of a difference here to the upside projections anyways. So this is how far the data goes back here in 1974 when S&P was at $60, right? This is the credit crisis low of a 1-2, which is the largest percentage decline, right? You see the three-way move. And then this is the COVID sell-off right there. This was the October 2022, the bear market, and this is all it is. Now, if you look at the entire chart, this is a monthly wave count. Keep that in mind. This is one, but I know I kind of compressed it. A one little tiny bar is a 1 month long. Okay, so it's a very, very long time. So you're looking at what, 12 bars for one single year, you know? And we did talk about the the like how the market has been changed over the years. Look how market used to trade before. Look how the year low and a year high. This is all a 1 year. You see? This is back in 2012, 11, 13. Look at all these years. It's all 1 year, of a price action, high and low. And look how much the market moves now. Look at these ranges, how wild they become over time. You see? And remember I was showing you this because it's all of this. TR. This. Look how it's pretty. You have to pay attention to these things. Look how market used to trade, and look how market trades now. Look how ATR has exploded. And here we are, people sitting comparing this market back in 2008 and 2009. Oh, because it's a similar pattern is there is absolutely no comparison. That's why this market drops more, like a crazy, but and it makes a sharp rebound back to the upside because the ATR ranges are so damn high over the years now. This market has changed big time over the years. It tells you right there. It's ATR. And I'm not gonna repeat the whole thing. I mean, you can scroll back up on a Slack that gives you the uh, how market has been changed over time. It's crazy to look at them. Look how this market moves almost 400 points. 377 is the ATR right now. This is the average true range. Month to month basis. Look at that. So if we take at this bar, if we look at this bar right there and with this, and okay, so the high was 7219 minus 6474. Yeah. The range was 745 here on this bar at April. That's almost double the ATR. That's like a two standard deviation move. This one right there, which was last month you just take the high, which is 60, no, sorry, 75.99 minus the low was 71.74, 425. And the ATR is at 377. You see, that gives you a pretty, like you get a general idea of roughly like a 400 points. So this volatility which hits the market now, okay? So you should like for a 1 month, meaning from the first till the 30th, there is an X the S&P has an expected move of roughly 400 points to swing in 1 month now. Okay, so market has become really wild lately. So there's definitely this is huge opportunities to make a lot of money. Okay, because this is what the range is. That's what it shows. Now, if we look at this March low, you can just take the high, which is 6901, minus the low, which is 63.6, 585. You see? Like these ranges here is nothing compare. Okay, these 4 months. If you just take these four right there, is nothing compared to this side. You can see right there how much it was into this. three kind of $300 range or so, right there. And you can see the change here, the how much the market moves now. This is why the market making V-shape reversals because the ranges are so high now. I wouldn't be surprised if we would have another down uh, week to kind of um, um, just to kind of like calm things down and just rip right back up again. It can happen. So at one point is it's an excellent opportunity to make money. At the same time, the people's portfolio is going to get shaken out pretty good as well. Anything to the downside as well. So right now we have because the month just started, right? So the month just started. We are at high is 67.20, low is 63.68. So it's been 200 and so it is 242 points so far. So 242 minus 377, that's 125 points more just to kind of match the 330, 377. So give or take, call it a 400, right? So another 150, 160 points swing to go just to kind of, match this range for the next, what, 3 weeks. So as when volatility picks up and just to pay attention to these things, the market is near not even close how it used to trade over the years compared to how it trades now, you know? And I wrote, we if you scroll up on a chat, then you could see that. But that doesn't, that then at the same time, all the stocks, they're all different because, we're just looking at the S&P 500. It's a very, I mean, the thing is like the year low is here, which is 63.16, and the high has been made so far this month. So, I mean, we have half the year to go. I mean, we've still got 6 more months to end this year. So, I mean, the question now is like, okay, I mean, this is the higher bar. That's the good sign. Okay, so we already have a higher bar for the month. You see? And the only way this thing can flip, meaning that it could engulf for the next 3 weeks, that if it takes out this low, which is 71.74, then it can turn into one of these blue bars, the engulfing bars. The point that I'm trying to make is when you start looking at a price on a monthly and a weekly time frame, I can promise you that you will just literally don't even care about any daily and 1 hour time frame. It's all garbage. It's too much noise. Look at the bigger picture, and this is why most of the time I just stay real calm throughout the whole yesterday. Yes, I was look. I didn't place a single trade yesterday. I was trying to pick to do something. I was like, no, I'm just not gonna do it. I'm just gonna sit back and watch. I was not even planning to do that. Whatever I have open, I was like, I'll deal with that. you know. But a great week, pulled up 5 trades in a row. Got them done in all 4 days. Don't really have to drag everything into Friday. So like take a take a sit back and just watch. I'm just looking at a bunch of things. It's just the like yesterday. How many swings were down for the week? 16. So these stocks, okay, this week, their weekly swing turned down. So when the weekly swing turned down, that's the meaning that now you have an official trend is down now, meaning you have a 3 weeks of lower lows. And how many swings turned up? Nine. So we have ABT that turned up, Amgen, Citigroup, DHR, Electronic Arts, FedEx, JP Morgan Chase, VRS, whatever this, and Wells Fargo. You see, financials are definitely starting to show some strength here now, especially this week. That's why I, I traded Bank of America, and the setup was pretty good. And it was Bank of America doesn't move like Goldman Sachs and JP Morgan Chase. Bank of America is like I believe it's 1.18 ATR, so it doesn't move as like a Goldman Sachs. Goldman Sachs moves like 20, 30, 40 points in one session. You know, it's a very high beta stock because the stock is over $1,000 as well. So the range on those ones are pretty high compared to, Bank of America, Wells Fargo. Yeah, these stocks, they don't want to move 4, 5, 6 points. Money can be made on these stocks, but I mean, I like stocks that actually moves 5 plus 8, ATR. So you basically long 100 deltas, you catch a 1 point move on Bank of America, you make $100, right? Compared to a JP Morgan Chase that could move 5 to 10 points. Well, that's 500 to $1,000. So you focus on stocks that actually moves, not just a little deadbeat. It doesn't mean that the stock cannot progress over time. It can, but we need to play something that actually moves. So I run a lot of scans at the close of the week because the close that what matters. So I was just looking at a bunch of things like how much the market has been changed over the years. Lately, not over the year, I would say, because the previous year is just, from here actually, back in 2019 and back. Look at that this year. Rallied up, completely washed out. This was a really strong year in 2017. Not a single down year, a month. You know, that's the choppy. See, rallied, faded, lower year, steady growth, steady trend to the upside, very choppy, move up, completely wash out, and then made a move up higher. These are more calm markets. Even the fact that they do kind of whipsaws, right? But they just don't, like this year right there, rallied up, full washout, then rally back up. You know? So these are more calm markets. Volatility picks up and goes away. That's a big, huge run right there. You see, like, and now you look after 2019, that's the 2020. Look how market rips now, you know? So we'll see what happens. Well, the good thing is that we have a higher monthly bar. This year low. This is call it 52 weeks low, 52 weeks high, which is the all-time high, right? So we have one higher bar, another higher bar, another higher bar. So we already had a new high. So now we just need to make sure that the market defends the 71, 74 low of last month. Okay. So 71, 74, which we can mark right, oops, right there on a wave count. 71, 74. So we can actually keep a record of this number, which is this 100% right there. So this number right there will engulf the this month, 71, 74. So we want to, whatever happens here in the next 3 weeks, the price needs to make sure that it stays above 71, 74. Okay. So to me, because I already looked at them yesterday, that future market already had, all of them had the daily already had a sell signal on a daily time frame. There's nothing on a weekly. You cannot, nothing is going to trigger on a weekly on a one single session. Um, but there's a very good chance that all of these index, the Q, SPIs, IW, the IWM, they're all gonna have a daily sell signal on Monday. The futures market is gonna have them on a Sunday right at the open. So the ES and the NQ already has one. I already posted that one yesterday, right? You saw those right there. So this is the ES. It already has one. And Qs, sorry, the NQ. Oh no, this is the M2 Q. This is the Russell. The NQs. This is the NQ and this is the ES. That's the NQ right here. So this is the daily chart. So the daily already has it. So this is pretty much 100% confirmed that we have we're right into a setback now. Daily is gonna confirm that, the correction is starting to unfold now. And how to play this damn correction, nobody knows which way it's gonna go. I mean, is gonna be a zigzag like this that completes an A, then it goes up in a B, then it comes down in C. That's one way to look at them. Does it go like this? W, does it go like this to an X? Does it go like this into a Y? You know, so we just don't know the subdivisions, how it goes. Well, I'm gonna have to take it session by session to see which one it is. Is all of a three, and now we go up in a three-way bounce, then we take another three down to make a flat. There's many of them. So you have a flat like this, three down, three up, five down. You have a zigzag, A, B, C. So you have a flat here and you have a zigzag here, and then you have one, two, three as a W, X, Y. So you have three of them. So now you probably sit and scratching your head. It's like, well, which one is going to be? So my suggestion is leave the Elliott wave alone when it comes to a correction, because it becomes a very subjective. You absolutely no clue. Nobody has a clue. I don't even know either. I'm gonna just see how each session goes, and then, you know, and just trying to make the best case possible to see how to label that. I'm not worried about that part, but we need more data to make then is it gonna be this? Then we don't need to, then we can eliminate these two. Either we just get rid of this, either gonna be this one. We don't know yet. For now, all I see right now is just a three-way move so far. Does that three can turn into a five? Okay. If that happens, if five, and then we should look for a three-way move back to the upside, right? So you have a five down, three up. So if that happens, so then you have eight swings from the highs, right? And then at the same time, we're going to be watching. I'm going to be watching and see if the daily signal holds, and then we just look for another five-wave decline. So that makes a case of a zigzag. So we just don't know that. I don't know yet. I cannot tell you or give you any answer. Good thing is monthly bar is high. There's nothing on a weekly signal, meaning that there's nothing on a weekly side. Price is trending well above the trend ribbon anyways. So it's just the matter of counting these corrections. So don't be married to these ABC, WXY's corrections. There's Elliott wave corrections are very, very subjective. Just remember that. It's just, I mean, I don't know. It's just, what is so bearish about this market? Nothing. You know? Yeah, I mean, we had a bearish engulfing candle. Well, there was one here as well. Was one. There was one back here. But this one was triggered on a downswing. So you always have to pay attention to where the bearish engulfing candle actually appears on a chart. Once if it triggers on a downswing, well, then you definitely have more selling pressure. When you have a bearish engulfing candle appears on the uptrend, you see next week went literally inside. It was an inside week and it rips right back up. Same thing right there. Bearish engulfing candle on the uptrend when the swing was up. Next week went inside, market just ripped right back up. Okay. This one right there is the same thing. We're up in the swing is up, right? I don't know. Are we gonna be in a inside, go into another inside week because we took such a massive leg down this week? Are we just gonna stay inside and then just rip right back up? Yeah, it's totally possible. But these are not, I mean, it gives you a caution that it triggers right up on the very top. That doesn't mean that this is the top. You know, these all, this one right there triggered a 3 weeks of sell-off. This one triggered a 2 weeks of sell-off. This one triggered on a downs on back in 2023. 1 week of sell-off and rips right back up. You see, this one triggered at prep and a very high right there. That actually ended up going to a much larger decline back in 2023 to October low. This is where the bear market was. Remember this 2023, this is the October low. So all of these red ones, there were the bearish engulfing candle in the weekly time frame. You see, like when you look at a price chart in a weekly time frame, how much noise that the chart will eliminate. People obsessed here with these daily time frames. You know, look, it's the same thing. I just changed the times. I'm just gonna start picking up all of the because I scripted them. So all of the bearish engulfing candles on a daily time frames are here now. All the red ones that you see, that's all on a daily time frame. But then as soon as you're gonna go on a weekly time frame, I mean you do see, but you don't see as many as the daily, right? That's just too noisy. Your odds of losing money is lot much is more is a lot higher if you're gonna spend your time more in a smaller time frame. I can guarantee you that. Daily signals fails often. Daily rotation shifts way too faster. So why you think I'm gonna sit and put thousands of dollars into a trade based on on a smaller time frame? Why would I do that? That's why I starting to look things when you um, look at on a higher time frame. These are the monthly ones. These are the charts that matters. You know, there's, if you ask me, and if you look at yourself, there is absolutely nothing bearish about this market at all. Okay, but we need to take a bit of a pause on because the way we just rallied back up, it's the same thing back here like in 2025. Look at this rip right there. But at least here, a lot of stocks will rally into the upside, but not here since this April low. This is the tricky part that I'm sitting and and fighting is where is this? Geez, where in the heck did I went? Here. Look where technology is. Look what everything else is. So whoever long tech right now, okay, is long energy at the same time. Rest are just, you just have to like you basically have to be really selective in the market right now. It's just because this is not a broad that's why that when I noticed yesterday all day looking at that, this is why half the market stayed up yesterday. Didn't sell off. It's just this one right there is the one needs to take a little bit of a break, and the semis. This one got fueled with semis, not from the Mag 7. Mag 7 is a freaking disaster. The only stock that is up is Apple. Here. So they're four up and four down. Google is the one that's leading the pack. Apple is at 12. Nvidia is at 7. Amazon is at 5. So the four pack wolf is leading here and four is down. So the strength that we looked at, like the where is it coming from, is all coming from the semi stocks. This side right there. Where is the chip one? This. This is where all the strength is, right there. ALAB, this, ARM, AMD, Marvell, Intel, Nokia, MU, GFS, SW. So they're close here, so this they still gotta work their way up. But this right there and this. Look at the momentum on these stocks and the ratio compared to the other ones. They're trading in 140 right there. This is the 100 that we're trying to cross. how much the stock has advanced, meaning that the ratio went up. Look at this. This is leadership right there. These stocks, look, 150s. It's insane moves, you know? We're I'm trying to catch a trade here. I can get here. This we caught this one, right? So this was sitting right there. Look how much it advanced. Look how the stock took off. This is where you see is where the institutional money is going in which stock. It's all in here. This this is still strong. That is, but it's showing you some signs though. This doesn't mean like, yeah, you just exit the whole thing. No, you still have to. Rotation tells you where to look. It's not a signal. It doesn't tell you like, hey, you gotta trade this. But the thing is this, once you are trying to trade these moves here, which are so well, your risk to reward sucks really bad. You know, that doesn't mean that you open a trade on Monday, Intel cannot pop 10, 15 points. That's just not the point. Or Marvel cannot pop another 10, 15 points on Monday. You, your thinking is on a based not just only on one session, like, oh, I'm in a trade and I hope the stock pops another 10, 15 points on Monday. But you're just not looking at the bigger picture. Your mind is so trapped, like it's like you just so focus on a session to session movement on a stock. They are in a leadership phase. you know it's going to take a long time for them to roll over, to show when are they going to start taking money off. When they're going to start taking money off, when they're going to start rolling over, that's when we're going to start you're going to start seeing weekly signals going to start getting hit on those stocks one by one. They're going to come eventually. They will. They always do. There's no such a thing as going to stay here forever. But if you look at the one right now in this entire pack right now, Astra Lab, 125.8 momentum. That's the strongest beast right now on this entire group. Other one is kind of cooling off. Other one is ARM. Then there's Credo Technology. Then AMD is at 119. They probably cool off yesterday quite a bit because of the sell-off. Marvel 116. Anything over 100, I mean, that's that you have the momentum that you want in a trade. We're looking for momentum. The entire framework that I'm trying to update right now is all based on speed, because I just wanted to get rid of all these dead rats. We want to cash momentum is where the speed is. That's where we're all gonna make money. you know this one right there, light right there, 91, you see it's dropping below 100 mark. Like these ones is they're just starting to slow down. These ones, anything starting to dip below 100 is starting to lose momentum right there, meaning that their upside is not going to be as much as compared to these ones. So it shows you the what's happening. But then you have to look at the actual structure to see how the stock is actually doing. Now, if you look at the light, I gotta have to flip into it. Bring it here. Now you look at the light right, the same stock right there at 91. Look, 4 weeks, right? It's all white bars, 5. You see how it matches? Because it's tracking the speed. What's happening here on this side is going to show here. That's how I did that. I'm going to change some of these things on probably after we're going to end this call to see how the next week goes. I want to change for several, it's going to take several months. So I'm going to boost them up a little bit more to see. I have some changes I gotta make, and then I'm gonna go through another 1 full month to see how the trade goes. And then the next month do the same thing. And then I'm gonna do for like 3 to 4 months. Once I will have at least like a 50, 60 trades data, then I will know exactly where to, because I have everything written here on my pad. And then I'm just gonna leave them at the certain settings on the script, and I'm just gonna leave it there. So it's gonna take several months. So I'm kind of just, but the point is like, it's it, we know we can see where the strength is. Okay. So hang on. So we have, so now if we look at all of these stocks, right? Every single one of them, the swing is up. But now for this week right there, look how many of them end up putting an outside bar this week. Nokia was one of them, got hit for the sell signal here last week. This one had an outside week. So all of these ones ended the week. This is the doji. This clearly shows one thing that, look at that. This is a mess. This is a bear structure right there, the red box. These are all engulfing bars. They're candles. So they took out a last week low and they made a new high. So they engulf. So the best thing to see is the money flow right there. So there is definitely institutional booking profits on these names. They're about to cool off. That doesn't mean that they're all bearish. No, they're not. But you can see right there how the money flow right there is dipping into a red territory right there. The Broadcom, AMD is not there yet. Still gonna take another week or two. See? So risk reward right now in these trades sucks because we're not chasing leadership. That's just not the point. The tier ranking is to see what we have on a scan, either on a tier 3 or a tier 2, that if the tier 3 can advance to 2 or 2 can advance to 1, once it stays at 1, if it can go into a leadership phase. Leadership phase when it crosses the line above that 100 mark. Right? I mean, the the only big one that I caught here is this, as you all know that. I still own shares, but I only closed the option side. This one is the beast right now in the entire pack. It's what has the strongest momentum right now. So any dip on this one is going to be pretty shallow because the momentum is pretty strong. right there. Straight up for 9 weeks, 280% swing. That's a beast move. Go signal triggered here on this one. Get rid of this. The That's exactly where we enter the trade when they reported earnings, you know, and then the I covered the option side, but I'm gonna hang on to those shares. I got shares down here, so if it does dip right there, I'll add a couple more. Arista, bearish structure right there for next week. Money flow is going negative. You see, it's just like that's your top right there, and that's your bottom range. So that's your range right there. So basically what you see right there is what? 3 weeks down, 24.8, 3 weeks up, 31.8. So this shows you what? This is a range bound. Trends are directional. Swings always gonna direction, meaning that you always gonna have this, which is what you call a trend like this. See? 7 weeks down, 49.2% decline, 280%. You see, look at the slope, and they call the angle. You guys need to learn one thing is how the Gann fan works. Because you're not gonna, well, you don't, there's some softwares have them, you know, that draws a 45-degree angles. Just just the angle of ascent that gives you a much clearer direction if the trend, how strong the trend is to the upside. Yes, the SMH has that, I think. Let me see. Let me do the semis. Why this thing is going so weird? So here we go. So we can do fan. Oh, geez. Not do it from a certain pivot. It's okay. Yeah, 45 and higher degree is whatever one we just switched. Went to chips. So this one, Arista was, all the swings are up, so you shouldn't. This one is still on the music signal right there. This one. You see right there, all the money flow is, they're cooling off for sure. It's got a sell signal here for next week. They're all trading well above the trend band. Nothing here on this one. This stock has a quite a bit of an upside. Just remember that this is only a swing one. Any setback that will only gonna come when the swing is gonna flip. Then it's gonna start looking for a second swing. Then it will adjust, and then it's gonna have a third swing to the upside. So I'm being a little patient on this stock, but I will definitely gonna buy it once it's gonna pull back in a second swing. Okay, so we'll just use a retracement of the swing, which is actually from here where the actual swing started. Back here is one. So the 23.6, this kind of a strong move most of the time only retraces. So these are the retracements right now of this 258, 218, this. So any kind of a, well, I don't know what the high is. Then we'll use. So that we can build zones. We'll watch what the rotation is. This stock has definitely has good upside. We can use this low. Look at this. And then we can take this high to this low. So we can just build some zones. There you go. See, now you got nice 2 layers of zones. So we can take, it's all about multiple swing. This is zone 1, zone 2, zone 3, zone 4. So it's all depends on the the decline when if whatever is gonna when if this thing goes like this a little bit and then the swing flips, you know, like there, like you see the swings were down. Then we just look for this kind of a retracement, and then we'll see where the second swing will settle, and then we'll look for a third to the upside. I'll buy the stock, but I just want the second swing first. I'm not gonna chase this extended move. I don't care where the stock is going. This is first. It's already sitting in a leadership phase. It's hard to chase stocks. They're already extended like this, but that doesn't mean it's not gonna give it an opportunity. Of course it will, because this is all a one. It's gonna come back down in two for sure. Then we'll go into a third up. This stock has good upside. I like that one, but I'm just gonna be a little patient. Did you get that text? Okay. So then MU, this one right there, this isn't a third, still gotta come down in a fourth. Like these are the ones I'm watching, you know. Like some of them are, this one is gonna, this is on the fifth. Arista is in 7. That's getting a little high right there. Arista is on 5. Skywork up in 4. You know, the 4, they're ready to come down in 5. You know, 3 setback in 4. So they're still gonna have the the more, the push to the upside. 3, you see them. I always pay attention to these what number we're in. Intel right there. See the same story as like a Marvel, the one that we looked at here. You know, these stocks has upside for sure. See, GFS, the stock is. I bought I bought this one at 32. Look at it. It freaking went to like 95. It went 3 times. It's just Nokia is at 5. These are gonna I'm gonna get one, but I can't just chase these ones. I'm gonna watch. This is very high. 5, see 6 and 7. Broadcom is 7. Man, Broadcom took a nasty reversal. Look at the outside weak. Yeah. AMD, same thing. See, the thing is this is that everybody who's dying for a pullback, the pullback comes, is the painful pullback. You know, pullbacks are not easy to buy. They take so much time. So you basically looking at this that these stocks will go like this, and then
Then he
from
did
here
something
they
with this.
go,
ये भी पड़ा हुआ था वहाँ पे.
and then they go up like this. This is where you're looking for the extended move for the rotation to turn back like this. You know, it just you you missed out on a stock. I mean, it's not the end of the world. It's not doesn't mean that I cannot find anything else. But I mean, we got lucky on this one. I mean, Marvel, Intel, and stuff. I don't have it, which is fine. I own Broadcom, since last year. So it's not like I've never. get to experience or never had a big monster runs. Look at Google. These are Google, Broadcom, these stocks, we bought them last year. I know none of you guys managed to hold, just at least own some shares. We had a huge sell off, and we picked Google, and I bought, some of these big companies. Like, look where they are now after a year. Buy something. It's not all about option trades all the time. Pick like 10, 15, 20 shares. Screw it. Just buy some shares, own something. It's not always about options all the time. Buy some shares, leave it. You're buying one of the best companies in the world. Fine, they can be down another 5, 10, 15% or so. That's fine. But just hang on to it. Just be patient. They're gonna turn around. They turn around pretty quick. They're the leader. I mean, okay, which company here of this entire the group right there of chips has over $1 trillion market cap? Broadcom, right? You think AMD worth over $1 trillion? So it's a common sense. Who's the general here? Broadcom. So if any weakness is gonna, if the market rolls over hard, right? If you say like, hey, I wanted to buy some, the best chip company, which one would you go for? I would go for Broadcom all day long. Once the market reaches that 1 trillion plus market cap, it's just not gonna flush it back down to 500-600 billion. They hold that leadership. Broadcom right now, we're gonna take this high to this low is right here. So the swing is up. Okay. So we have a 495 high, 289 of this swing. So that was a 70% move for the last 9 weeks. So we 446, 416, 492, 368. I don't know if it's gonna come back in. It's gonna be below this ribbon. This ribbon is, I would watch this zone. If it's gonna give a little bit of a false break to the downside, right there, this area, this window right there, it should give a pop back up a little. I might swing a small counter trend trade on this if it comes back down to this zone right there to see if we can attack this. So basically, like how to play levels and stuff is like once the price comes back down, touches it, I just take 390, 415 call spread. Just take these two. This just gives you the strike prices, which one to take, you know? So if the price comes back here, test this. Yeah, it can dip another 2, 3, 4 points. That's not a problem. If you go out like 40, 45 days out on time, if the price goes down 5, 6 points, really, I mean, you're panicking over that. It's just a matter of like the stock pops right back up to 392. Okay, cash it out. All you're trying to do is just trying to play this move. You structure a spread 390, 415. You just take the exact same strike prices. That's your spread. You try to get back here. That's your money right there. Close the trade. Move on to another one. Whichever level the price comes and hit that, look next strike up and up. That's your call spread. You buy this one, sell this one. This one get tested, you buy this one, sell this, sell not that much. It's going to be much wider because not a cheap stock. Like you just pick these two higher strikes, call, sell. So it all depends where the price, which fib is being tested, and which one is going to get a bounce. This one works pretty good with fibs, just to let you know. Anyways, it is funny yesterday that the Trump was tweeting about the market is not going up on a good job report. Yeah, nobody's buying them, you know. So what I have it open here. Dude, this is a disaster right there. Ay, ay, ay. Bitcoin. Man, it took Bitcoin 3 months, B3, 37.9. It took one month, flush it back down. You see that? Swing right back down again. Now it needs 3 more months of higher highs. Yeah, Bitcoin is done for a lot for some time for sure. The problem is this. Where's the crypto? Is this. You see all these miners, and look at these ones. IBIT, Coinbase, Ethereum. This is the worst one. And MSTR. Look at these ones. Look at this. This sucker is gonna break up to higher. It's been sideways for a long time on a weekly time frame. You see, it's a pretty narrow, wide kind of sideways range. It could it can make its way up. I mean, people wants to buy these pullbacks. Yeah, these are your pullbacks right there. You know, it's very challenging. People talk about pullback. Oh, I missed the extended move, and if it's gonna come, oh, it's gonna come. We'll take a look at them. We have great tools. We have rotation. We have signals. We have, we can well define a pullback when it triggers and then when to enter. But you can't, I mean, imagine sitting like this on this stock. It's gaining. It's looking good, but this is all the all the moves so far. But it's been pretty. So I don't trade this kind of these names. I know some of them are obsessed with them. I don't. I'm not. The problem is not this. The problem is this. Ethereum, Coinbase, this, and this. This is the problem here. This is the problem right there. It had a, you see, look at the momentum of this. It's 59. Look how deep this thing is going into the lagging quadrant. You know how many months it's gonna take for this stock to turn around? You need 3 months of higher highs. We will see here first once I'm gonna see there's this is a Bitcoin is in a massive, well, it's on a cycle reset. That's clearly what it is. There's no denial there. Look, look at the weekly picture. All the miners are up, all these ones are down. You see, that's exactly what I'm talking about. And look how rotation confirms that. See, all the miners are here in a leading, meaning in a leadership phase. Look, all these other ones. They cannot enter a leadership phase now because the monthly is dying. You know, weekly, monthly is, you all guys have to be pay attention to those charts more than your day-to-day noise. Make me a
Oh,
1 hour wave count, and yeah.
can you add iron? Iron is one of the key players in the miner turned, AI data center,
Yeah,
stock.
yeah, it's right there, the leadership phase as well. I don't, I mean, where is that? Right there. This
And also, can you add APLD, Applied Digital, APLD?
this one? APLV. Yeah, they're all here. Kind of backed off a little bit this week. I got a lot of support here doing this. I hate charts like this. Is so, I mean, it's breaking out, which is a good thing. Um, you see right there. So it's definitely breaking out of this range, right? So if you, I don't even know what is that, but one of the miners, whatever. So basically what we're gonna do, you can do,
Oh,
take
Mo, I think we need to add Wolf too. WLF.
WLF.
No, WULF, Wolf.
That's a miner as well.
Yes.
It's right there. It's, I mean, these are, which is a good one. Mara, CLSK, Riot. These are have a higher momentum. These are good. Heart. MSTR is high, but ratio sucks. Iron is good. This one. I would, this stock right there, that's like a three-way move, right? So you have a 6, 6, and 9, right? That's how you see you have time. Every time when you go up or either you come down, should your your price, if the downside stays, this is more than 6 days, 6 weeks versus 9 weeks. The downside now is 9 to the upside, right there. You see, so this swing was 9, this swing was 9. Swing is up, so we don't have to go that far. All you gotta take this low to this low. It's at right at that 50, which is this 50% retracement, right in that ribbon. I would, this is the outside weekly bar. If this dip next week, I don't know. I don't think I've ever traded this thing before, but
You
watch it.
did. You did once.
I did.
And we made money. Yes, yes. Yeah, you did option a while ago.
Okay. This area right there is 48-ish, kind of 50. This, that should give a bounce back up. It's this thing is going freaking flat. Ay, ay, ay. RSI is neutral. Not a topping pattern. What a rough week. Wow, 27% range. Relative strength is good, outperforming the S&P. Yeah, I'm gonna watch this. I can watch this one next week. See, the thing is this, when I run a scan, these names doesn't show because they're already sitting in the leadership phase. I'm not chasing leadership names. I just have to individually track them, you know. We're looking for tier one, tier two, tier one that can go to a leadership phase. That's where the extended move comes in play. So now if we look at the chart, see daily had a sell signal, weekly does not. Weekly is pretty choppy here. The outside week, just momentum is definitely slowing down. That's what right there, money flow is. See, this has the white bar. Every time you had a white weekly bar, it's just there's not enough buyers for the week for the price. They can push the price up. Okay, you just always have to look at that way. So most of the time, I'm just just stay neutral. That's the if the structure is good, price is trading above the trend, the ribbon, the trend band. Buy signal is valid. You end up the week with the white bar. Well, what can you do? You know. So stocks that I am looking for, some of them. Hang on. I was actually gonna show you on this one. Oh, if I post, I'm gonna actually do it on a Twitter just to piss everybody off. The the major reset, if you want to show you things in a bigger time frame, that's one. This is where you had a massive volatility spikes in the market. COVID sell off. The 2022 was quite a bit, like 27% decline. These are your basically a three major resets. I mean, there are dips here as well. You know, this one. I mean, these are monthly charts. So like this dip right there, so there are dips like this one. So I always circle them. This one, whoops, this one. They're always gonna be along their way up. So I did you take this projected down to two, your 100% relationship is a 16, 17,000 on the S&P, just an equal measured moves. Going there to 161 point is decades out. But if you can just only count five smaller whales just to reach 100%, you know how much upside is left on this market? Give or take, if let's say if this stock starts at 30 to points, you're looking at roughly a 30 points difference, right? What is that? It's nothing, right? It's not going to make that big of a difference. My data on this one stops at 60. If we go back here on the S&P to the on the Optima side to see how far we can go. Now this one goes back to I can actually do 16 back in 1950. Okay, so that's 16.66. I can actually stretch it down here like this. 16. She's going to change all those ratios. I'd rather do that. Put this one down to 16, 6 right there. 1641. One couple penny not going to make a difference. That's 1666. So I will start from here. There you go. So this missing data right there, you basically count them as a 1, 2, 3, 4, 5, right? It just messes up some of these fibs to the upside, which I can fix them. It's not a big deal. Now in this case right there, if we just count, start from the 1640 up in one, 3 back setback, right? To the credit crisis low. So now in this case right there, your minimum 100% relationship, okay, is at 66, what is that? Jeez. 63086. That's a 100% equal distance from 1950 low to this high to this low to 100% relationship right there. So if I do 3 versus 1, that goes here now. See, I can adjust. Oh, I gotta mess up all because I was at the 60 before, like this. You want to, that's the beauty of Elliott Wave. Gives you a long-term forecast. Right there. This is the bare minimum right there. This market has upside, but just people just never wanna, they're just too focused on day-to-day noise. So from here, this is all internal is good. I just only have to change that. Only this part will change. So we have 63086. This goes to like 104, 972, 3 versus 1. Geez, I don't even know if I'm gonna be a trader by that time. So right now, so you just take 1, 2, 3, 4, 5, 1 COVID setback. And then from here, you take 1, 2, 3, 4, 5 to, so now, and within that 3, this is where we're completing right now. Third, 4, 5, just to complete 5 smaller waves within this 3. Just change this. So we're going to focus on a 1 higher degree, then we go down to a smaller degree, then we'll build up the zone. Well, we don't need to go up that high. We can leave that part as is. So we take 1, 2, this gives you 85 to this. And then we take 1 higher degree of this one, 3 versus 1, and we go here. That's your zone right there, this. And what is the high of the S&P? So far, come on, go back. 7620. 7675 is the 100% equal measured move of this one, of a smaller degree. That's how you build stack zones. These are your upside well-defined targets. You see how close they come? Elliott wave is pretty damn dangerous if you do it the right way. It gives you the fib relationship. If you count your waves right, you nail them like almost to the penny, especially the downside, downside as well, like this. So this AI boom, that what it is that's Again, this is the monthly chart. It's gonna take forever. So what we're trying to do is we're trying to complete. Look at where 200 goes. That's gonna be the real test right there. This area. If somebody would ask me long, I don't know how soon and how fast it's gonna go, but let me make this box. This would be my target right there when S&P coming out of 2019-50 is just to get to an equal measured move. Because whatever your third wave is, okay, it cannot be shorter than a 100% relationship anyways. Always remember that. It cannot fall short. That's the bare minimum. I don't know how many more years it's gonna take. Geez, I'm looking at what 2000. I don't know what the time frame is gonna be. We can run them. All right, that 2046 is the expected time right there. We are at what, 2026? 2046 minus 2026, that's 20 more years. So there's a because you need to know this. I'm not worried about this that far anyways. All I need, if I could get myself in the next 20 years, geez, I'm gonna be fucking almost 60, 66 years old. That's crazy. I'm 46 now, so I'll be 66 over my retirement age of 59 and a half. Think about that for a second. So, but for now, I could at least just from credit crisis low to this high to the COVID low, if you can just even get to a 100% relationship here, that's even be nice, which is 11,11155 right there. That's a 100% relationship from COVID low. So you can focus on this part as well. The only reason I'm doing this way is because of the Gann swings. I spent a lot of time looking at a bunch of things last couple days, you know, but this is the bare minimum projected this low from the COVID low, meaning that this low, you have a high that's a higher low. So 100 projection is here, 3 versus 1 is this right there. So now you just gotta have to fight yourself to see how you're gonna be able to fit 5 smaller waves on one small degree and one higher degree to fit into that 100% to a 161.8 relationship. That's what it is. That's the bigger picture. I did the same thing. I cannot even, where the heck is my pennies? I don't know what the heck happened to this. Here you go. I don't work much on The motive wave, only if I'm in a mood, is now this one only goes back to 2008. This one doesn't have the story of a 1950 like the S&P does. So this one has one, two, three, four COVID up in five. So do you have a five completed waves? Okay, so the semis has two major resets, okay, in the entire chart. One happened here back to October low, which was 47.62% decline, right? And this was a COVID happened, which is 37. So 37 versus 47, there's a difference, right? So it means that you have a one, so your higher degree correction should be at 47, not at COVID low. Okay. Because if you're going to put a 1-2 here, then this 1-2 is going to be bigger than this one. So that's not going to work. Okay. So the percentage decline matters. So the largest percentage decline the semis had since the 7 was this one, was 47.62, but down to the 2020 October low. Which is the second one after that? Is this one, 39.90. Semis had a very strong relationship of any setback of a 40%. Just remember that. Okay. So this stock has this it rips hard, but then every time when it's gonna set back, okay, it's gonna set back into a 35 to a 40% range. You see 47, 40, 30, 30. It works really well. Okay. So these are all this one, 30, 30, 30, 30, 40, 40. You know? She's very it has a excellent way of repeating patterns. The stock, the semis does. This has a lot of upside. Okay. And so you're starting a wave count. This is a monthly wave count. Keep that in mind. Because each one bar is 1 month long. So the 7 to 159 completes one high degree because this is where you have the largest correction. This is one smaller degree. So you have a 1, 2, found support here, April low, which is what the tariff sell-off was. This is where you had the higher high right now, right? This is so your minimum 100% relationship was 576, which already we tagged them, right? So remember I posted that thing on a Twitter as well. You can go back on a page. I got them from here. And then I posted that thing on a Twitter. I was like, it's just an equal. I was like, I'm worried about a 161.8 later. Let's get to 100 first, you know? And this thing goes, so this is already tagged 576. Now it's just a matter of like if this is the third wave with this AI boom, which it clearly shows that's what it is. Your next stop on a 161.8 is at 1226. Okay. That's gonna be that's three versus one. Because this third wave right there, it needs to move more because it has to make that room for this fourth wave to breathe. Okay, and third wave here is pretty. It's just only has moved an equal measured move from this low to this high, projected from this low to this high. That's a 100% equal measured move of this leg and this leg. So your typical 3 versus 1 is when it reaches this and this. Okay. Now you take the distance travel here from this low projected, which is the highest percentage decline of this entire chart, was this to October low, which is where we had the bear market. The 100% measured move is this. Okay. So that's how we're not going to go that far yet. So your minimum, this one already got tagged. Okay. So we got there already. So this is good. This is where the 200 and 100 is sitting right there into this mark. The price is going to get here, it's going to hit 2000. 1843, 1900. I mean, if I have instead of rounding up to 2000, if somebody would have asked me what would be my long-term target on the SM on the SMH, I don't know, with by end of year, by next year, year and a half, I don't know how fast that thing is gonna run. I mean, 1900, I can put a price tag on this all day long, on this on the semi. This is on a third of a third breakout right there. These are excellent. What you watching here is all matched with Gann. And keep in mind when Elliott and Gann they work side by side, your odds of being wrong is very, very slim. I can tell you that. How do you think I I came up with this the cues? But I posted that because I'm not gonna tell why how I'm doing it, but I wish I would have bought more that time. You see, that's how long it takes. You see right there? This was back in March of 2023. So what I'm looking on this case right there is just to see you can extend this one out more because the ETFs don't have enough data like the S&P does. So I already adjusted this one as well. So so this one back in March 2023, that was at 311. Even the fact that we have the April sell-off and all that, remember, with the tariffs and stuff, that 311 went up to 491. That was in what, September of 2024. So we're coming off of March, now going to 2024. And then we went all the way back up. What was the high so far? To 748. So we're right there to this. So let's look at this one. Come on, man. Where's my... No, I did that one. Where the heck it went? Did I lose that job? I cannot be. There you go. I need to adjust these. There is one thing I will tell you. That's the beauty of motive wave is once you have a chart that you start a wave count, all you have to do is just to hit save after any change. Okay, you will never lose that chart. You'll never lose that chart. So, that's the thing about when you gonna go out and spend $2,000, $3,000 to buy something. It has value. You need to understand that. So same thing, right? We started back here back in 312 in 2003 in March. So on that time, you see the subdivision there, right there. Now we need to count five smaller waves is to fit this fifth wave, right? Because once the price advance, you need to know where you have the corrections or not along the way. So what we're gonna do is we're gonna take the same fourth here, put one here. That's the April low, which is the tariff low. And now from here, we're gonna try to do 1, 2, 1, 2. Okay. You see, like now I have semis. We looked at S&P and we have the Qs. The Qs and the semis will have is gonna be they're gonna be much good. They're gonna be good because they don't go that far down into a 19. It doesn't have that enough. They're not that old ETF. So this is good. So what we're gonna do is our major support. Oops. Again, I mean, you're looking at something that is not gonna happen 2, 3 months. Okay. You see right there, maximum support held, boom. The I'll just mark the major ones right there. And now we take one more line and just put it right there. So into this 630, whatever the 635. So in this case right now, we do the same thing here. Okay, we'll always take the largest percentage decline. Okay, where do we have the largest percentage decline on this one? Off the low. One here and one here, right? So when you're looking at a blank chart, do you see anywhere else? You need to find two larger correction in a trend going up. So correction happens where? In wave 2 and wave 4, right? These are the two higher low. Those are the corrective waves, correct? So that all happens here. Wave 1 is a motive wave, wave 3 is a motive wave, wave 5 is a motive wave. So you have three motive waves and you have two that travels against you. So we have two of them. So that's 1, 2, 3, 4. Now we're looking for this fifth one. So on the fifth one, we need to count five waves. Okay. Now you understand what we talked about it before, how much of the ATR has changed in the last couple years compared to what it was before. I don't have that tool here that it shows what the year high and year low was because this is a monthly chart. Optima does that, right? So we know that we have a much higher ATRs now. So meaning that the ranges on these markets are gonna be wild for a period of time. That ATR, that increase, that gives you that the market is in a full expansion phase right now, not in a compression phase. When the market compresses, ATR drops. When market explodes higher, ATR will move higher, will go up as well. Okay? So remember that. These are the key things when you're reading a chart. See? That's monthly. You see how ATR is ripping to the upside? It's at an all-time high in this entire in the history of Qs now. Meaning you have to be mentally ready now. You're gonna be in the stocks or some whatever that you're planning to buy. You're gonna catch big moves and you're gonna see a big drops because the ranges are ripping to the upside. Look at this. Highest it has ever been in the history of Qs. So this drop yesterday of 5%, nobody should be shocked over that because look at the range. Of a 1 month to month basis. And don't be I wouldn't be surprised. I said, I mean, anything can happen. I wouldn't be surprised. It should be freaking reversal in the next 2 weeks, right back to the upside. Totally possible. Pay attention to these things though. Month is where you look at the bigger picture. Weekly is what defines the trend. If you have a broken monthly structure, you fighting all the smaller time frame in between. It's not going to work. It's the same thing with the wave count. You start from the higher time frame, then you bring it down to a smaller time frame. That's where you're going to find entries and exits on a weekly time frame. Weekly time frame defines the trend, not daily, not a 4 hour chart, not a 1 hour chart. You're completely just wasting your time. Monthly and weekly, what matters. Big institutes in the world who manages billions and billions of dollars, they position based on weekly time frame. Always remember that. Any large institute, big flow money is all through the weekly time frame. Monthly is a cycle. These are more related to pension funds.
नहीं हो पाया यार. आई
Okay.
थिंक वो लॉस्ट मंथ. हाँ. आई
What?
गिव इट अ शॉट बट इट्स आई थिंक या तो बड़े पुराने हो गए हैं तो थोड़ी मिसअलाइनमेंट हो जाती है उसी ओवर.
I don't know what he's talking. So then these are the ones that you are looking at is the ones that you see the ranges here. They're wild. So pay attention to these things though, because we will trade. We'll do our best to find more trades for the month. We just started.
So, Mo,
Yeah.
I understand that we are in a Super Bowl cycle still, and the long term, there's nothing bearish about it, but the short term, where our money is. So,
Huh?
can you break it down to more short term analysis?
Short term is the weekly time frame. I mean, here I have them weekly, daily, side by side. I mean, here the Goldman Sachs weekly here, daily here. I mean, it just all depends. I'm like, I mean, you can give me any stock, I can look it up. Google is Oracle is good, you know. I should have focused more. I'm gonna do probably another trade on. I haven't did Oracle. Tag 246 kind of backed off. See if it can come back down here a little bit. We can just try to play this move back up. There's a nice strong signal trigger a couple weeks ago. This is sitting in a tier one. So, but the only downside now is because it has to fight this on the way back up. So any setback here, that would be this move would be good. We'll see what happens. This just when you have a decline like this, fine, you caught this move, but you looking at this, that's a tough one. You're looking for a V-shaped reversal, you know? So you always have to look at the nature, the the decline. UPS, I'll just go with because I have a list here that we can fit. This is our execution tool anyways. I seriously don't care about as much wave counts and stuff. Okay. This is what matters. This is what I trade. This is where we execute our trades. This is where we manage risk. Okay. Here's your S&P 100 stocks. The only buy ones, we will say buy, the ones that are neutral, they're still in a buy phase, but they're just losing momentum right there. So these are all of them right there in orange. These are all hard sells. So there's no edge here now on these stocks. Okay. These are all reflect weekly time frame, not the daily. I can change it to a daily, but I don't want to. I want to keep them at a weekly time frame. So all the stocks here, UNP on uptrend, GE buy signal, GM buy signal. See, all of them has strong momentum and trend to the upside. Eli Lilly is 52 weeks high. Cisco is to the upside. So these are all buy right there. So I don't really when I start the computer on when the market rings and I know this is weekly time frame. I know which one is on a buy list. I know which one is just sitting neutral now. So you have sales. Tesla has a buy signal, but it's sitting in a neutral phase, right? That's not the edge. I want the stock to go up here. I didn't trade. Did we trade Tesla this week? No, we did not. A week before we did. No, I think we did. I don't remember. Do you like that little fancy one? It looks good. Yeah, we did Tesla. Yeah, I had the the broken wing butterfly. So we did this one, Microsoft AbbVie Dash. Didn't really like it, which it's fighting and Bank of America. So we only did five. Anyways, AXP neutral. You see, it has a buy. See, this is what I'm saying is having it's not about chasing these buy signals. It's all about the momentum. It's all about the speed, this is why I wanted to eliminate these dead rats, focus on the leaders that actually are gonna move, The these buy signals, they look very promising. Okay. They look very promising, but at the same time, but you see, they're all bunch of white bars. So it has to move up. EBT, nothing even neutral. Microsoft, neutral. See, it has a buy signal, just neutral. Jeez. Coke, neutral. See, bunch of, I mean, they have buy signal, but they're just range bound. See, Adobe buy signal, right? They look all white bars, even it has slightly had a move up as well. Caterpillar, neutral right now for the last 4 weeks. See, it doesn't have any expansion to the upside. See, PG right there, neutral. See, all these are all neutral. Intel right now is neutral. Right there. Got hit with a sell signal on the daily side. You can't just sit and chase. The Broadcom neutral got a sell signal here. Yesterday got hit with on a daily time frame. So we have Broadcom here. Chevron, Microsoft, the MasterCard, neutral. See, because all because the money flow has not turned yet. MDT, neutral, like these stuff. Like, see, the thing is like, a stock pops. Oh, is it bullish? Should we go in? Should we buy? That kind of a nonsense, 1 week stock goes up. Oh, can we go up? Can we load up? No, I mean, the same thing. What stock comes down 1 week? Oh, the top is in. This question, I don't even answer them. So don't even waste your time asking me these questions. NVIDIA, neutral. This is a complete list that I look at them everywhere. Google is neutral, ACN, neutral, booking. So they have no edge. Now these are the hard sells. AIG, Netflix, see, Starbucks, T-Mobile, down to 52 weeks low, AT&T, Lockheed, under the sell. See, so these are the stock that's sitting under pressure. Pepsi, BlackRock, got hit for the sell signal. Comcast, down to new 52 weeks low. Honey, sell. See, it shows you a buy here, but that's not that's because this is weak. This system here is going to tell you everything. Boeing, sell. Look at this, how messy it is. We caught this move, remember? And look what happened after that. Down, up, down. Screw that. I'm because the whole list is whatever is sell here is gonna move up to neutral. Once it's gonna go up to a neutral, it's gonna pick up momentum, it's gonna go to a buy list. So this goes, that's how this list works. So whatever sell, it's gonna trigger a buy one. A buy can be a neutral, that's where the selling will stop. And then from there, it can go up to this one. It updates in a real time. Okay. So then the ones that are here starting to lose momentum, they go into a neutral phase, meaning that there's no edge. That doesn't mean we cannot trade, but we cannot trade. We're going to take a very small counter trend trade. That could last the same session or the next day, and that's it, we're done. It's not something that you can hold for that's not like you starting a position. A positioning is that you have the actual buy signal. That's what you have a positive money flow and things like this. So but that's where you attack to the upside. Just it filters everything. I need filtration. I'm the guy now who comes with a big broom and just like brooms out all the dead rats. Just try to pick the Costco sell. These are all sell. PayPal, you see, whatever this in this one, Gilead Science. They're all hitting with the sell signal. McDonald's, Verizon, Meta, Pfizer, Disney now. It has a buy, you see? It's lost its freaking all momentum. There's no edge. 4 weeks. See? I really was hoping that things are gonna turn back up is this thing because it triggered a buy signal here. It tried to make its way up above this trend band. You see right there, the red one. It just doesn't give that the breakout. Right there. I'm hoping for this breakout. This holds. If this can make its way up, but no. So we have a trade. I'm gonna end up taking it on my chin, which is fine. What can we do? Walmart, sell, Lowe's. These are all sell. Uber right there, same picture. Jeez, that thing sucks. Charles Schwab, ISRG. See, they all decline. A simple list that I trade. That I try to find trades and give you guys trades as well. I want to trade like these ones here. They are good, but they're losing momentum. When they're losing momentum, basically they just moved from buy and they fell right into a neutral phase now. That doesn't mean that they cannot go back up, but we need to follow the RRG. We want to see how the rotation is doing. You see NVIDIA right now, last 3 weeks, it's just is literally a dead money. She just whipsawed around right there. outside weekly bar. See, money flow is going negative. Yeah, you need to see expansion to the upside. You want to see positive money flow like this, you see? Right there. A stock sits in a tier one, positive money flow, buy signal. Now you see like if the price can break out that wedge pattern and enter into a leadership phase. That's exactly how this trade played out for us. That was my thesis behind this trade. I know that I'm entering into a tier one right there, right? The price was above the trend band, positive money flow. Okay, let's see if we can get the extension and the price can move into a leadership phase. That's how the trade played out. You see, these are the things you gotta have to look at. Then at the same time, I had this buy signal and the go signal triggered here on that one, so that helps as well. You see, there's multiple layers of confirmation when it comes all goes, and that's where you starting to say like, you know what? Yes, is where I'm comfortable going into a trade. You can't just blindly trade a buy sell signal. There's tons of them out there. You can spend a couple $100, buy yourself a software that could make you a millionaire. Yeah, good luck with that. The mechanical thing is one thing, but rotation, money flow, I think it mattered more, especially now the way market is moving. Clean charts, no Mickey Mouse stuff. We played this Bank of America. I think I want to go back in again on Bank of America. I kind of like this move. 52 weeks high, ABC. Now we can do a one smaller 1-2 and just look for this extend the move to the upside. I might do that. Might attack this one next week again. Money flow is turning right here. Has a buy here. Money flow is starting to turn up. Okay, I
So is
think.
Bank of America is
Huh?
the best one to trade among financial right now? I
Is
think
this
that your scan showed like a Citi and JP Morgan.
those are the ones that swing just turn up. I mean, we can look at the financials
Yeah. That's right. That's right. Among the swing just turned flipped
for
to up.
this week, correct?
Among that, it was among financial. It was a Citi, JP Morgan, and Wells Fargo. And
Yeah.
I didn't see Bank of America there.
So this one we can do individually. You see, they're not the this is see Wells Fargo is way back there. Okay. So the only reason I end up going with this is because of the you see the momentum right there at 100. Still got work to do. I think is Bank of America, I think is a good bet to make here. Okay, to the upside from here. Like we can look at JP Morgan Chase. The problem with JP Morgan Chase is this. Okay, let me show you the JP Morgan monthly swing is down. See, it started up that music signal. So it's been pretty range bound. Okay, you see right there, monthly swing is down. Look what JP Morgan is doing. Last month was the inside month. So we have one, we have two. This month, now JP Morgan needs to break 316. If that happens, the monthly swing will turn up because you have 3 months of lower lows. So now it's trying to see if it can break this 316. So 316 on a JP Morgan Chase this month. Okay. The high yesterday was 317. Look how sneaky market is, Push you, then it closed it at 312. You need 316. That happens, the monthly swing will flip. It has a go signal here as well. and it has the music signal, and it has my signal here. So there's a lot of confirmation here from this low on the way up. So it's gonna flip higher low swing. So this is the move that we're looking at on a JP Morgan Chase to happen. This is a bullish structure here with the green. So this is this. And on Bank of America, you see on the Bank of America, we have a higher monthly swing, higher the weekly swing, and it triggered a go signal as well this week. That's what I'm saying. I looked at them yesterday. So I'm gonna go back in JP Morgan Chase again next week. We're gonna target this 55 breakout to the upside. So the next spread that we're gonna roll next week, again, price is above the ribbon, right? That's one go signal. Money flow is turning positive. Rotation starting to catch up some momentum, which is good. And we have a buy signal here as well. No, not the sell here. The buy signal is here. That's a fake one. That's why I'm not worried about this. We need to crack this resistance right there. That's the break. That's the breakout. There you go. This. That would rotation improve. Money flows this. Go signal goes. This is the breakout right there on Bank of America. Should we wait or force a trade now? That's why I exited the trade, took the money, because I was like, we'll see what it's like. This one only moves 1.18 ATR. It's a very low ATR stock. So when you go to a JP Morgan Chase, this sucker moves. This one has 6.4 ATR. So the range on this one is expected more. This is you see, it needs to break this for 316. I already know because I already have this here. It's the pivot, the white dotted line. That's the weekly pivot. That's the daily pivot. So GS is the one that's ripping to the upside. This one dropped almost 5% yesterday as well. You see, this one moves 33, 34 points. Plus expensive stock as well. Yeah, Bank of America is the one I'm really interested. And that's a good setup. Wells Fargo, yeah, to see nothing. There's no buy signal here. So financials are definitely showing some signs. Yeah, I'll go with Bank of America one more time next week. I'm gonna buy. So we'll do the same thing, 30-day, 35 plus out on time. The spreads on Bank of America is pretty damn cheap, anyways. You can make $1.15, $1.30 call spread on Bank of America all day long for like 3-point wide spread. You just have to bump it up on number of contracts to see where you want to adjust your deltas. And then from there, you see if the trade plays out. But these are not like you're going to catch a 3-point move in a one session or so. It doesn't move that much. Yesterday, 0.96 DTR compared to the ATR. It's a very low range stock. It pays. Structure is good. We'll go in. Look at this. This is so the same thing here with Tesla. All-time high, full initial decline. This is the move up so far. So it's basically doing what? Remember that strategy that I talked about? Risky move. This is the move that everybody's the guy's trying to play. 50% retracement here of this move, and then the 50% retracement of this. That's the whole trade setup. And then If it goes like this, fine. And does it go like this? Well, then we're going to find out. Because right now on a weekly time frame, this is the low. This is a lower high. So this one right there is looking for a lower low. Just to keep in mind. You see right there? Remember, Tesla was shown in tier 2, correct? Yeah, it's not there anymore. I'm going to refresh that one on Monday. It's not going to make it like this. You have a weekly swing down, monthly swing is down, daily swing is down. How you think that the stock is going to advance from tier 2 to tier 1 with all the downswings? Here, there you go. Weekly is down, monthly is down. Oops. Daily is down. So all time frames across the board, swing is down, but the stock is sitting in the tier 2 and we're looking to go to a tier 1. Really? How that thing is gonna work? Yeah, this thing is looking, this thing is looking for a little deeper retracement for where it's gonna go. I don't know what's gonna happen next week with the SpaceX the IPO, whatever the okay. We're gonna stay on time, not gonna drag too much time. Look at this MS on a yearly. Jeez, for 6 years, this thing has been going up. That's the rule of this one. This is a very unique, one of a kind buy signal that keeps you with the trend once it triggers. Basically, what it is not about. So what happens is that whichever week you don't see that pink signal, it means that that's it, that's the exit. I call it a music signal. So as long as the music is playing, you stay seated. So the one right there, I believe this one, CrowdStrike, has been running for 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks. So next week the new candle will open, and if it does not gonna get it, that's it. You get out. Okay. So you have whipsaws around, but it will tells you when to get out once it's gonna, once this thing will stop. So it just works just like this. It doesn't mean that the stock cannot go right back up again. It can, like this. This is an example of Apple stock, right? One of the most studied stock. It triggered here back in July 4th, this weekly bar. Okay. So from here, every week candle opens up, it continues. You see, every single week. So week opens, new candle opens, and it stays there, it stays there. But then you always have to wait for the close to officially confirm that. You can't just make a decision on Monday or Tuesday or Thursday. The candle opens, but it has to close. And so this thing continues from here every single week all the way until December of 2025 of last year. And then the music stopped here, which is December 19th candle. And the stock dropped 15%. Or now from here, would be about 12, 13%. That's where the music stopped. So this week right there, if you get yourself in here and you just stay patient, you know the music is playing. I'm gonna just stay seated. Whichever week that I saw like, okay, well, it's not there anymore, just exit the position. Well, how advanced and how much the stock is going to go up? Well, nobody knows that these things. We have fib projection that will I can see like, okay, these are the expected move going up for the price based on a swing. We can get all those targets, but that's not the point. This one, you don't even need anything. You strictly follow every week. Is their signal is still there or not? Whenever this thing stops, you just exit the trade. That trade, that that week, you're out. But that trigger, it doesn't triggers on a lot of stocks. It's a very unique script. Okay. So
Mo, can you overlay first on Apple chart?
on a weekly, yeah, but stocks, I do. Yeah, 300. See, the Apple had a 10 weeks of a straight melt up, you know? So now
Do
the
I
app,
see that sell signal? Is that a sell signal, the red arrow?
yeah, on this one, on the Apple that triggered last week, so that it triggered an outside reversal bar. So it might cool off a little bit.
Yeah, I'm wondering if the next week's WWDC is a sell the news event.
Yeah, but a sell signal can trigger here, but you need to make sure that a swing has to confirm that as well. You don't want to act right away as soon as you see something. Price can reverse back up after next week because you need 3 weeks of lower lows to flip the swing. You know, so we already know Google. Okay, now Google is gonna fight next week. Okay, for the Google is gonna be, remember the third week rule, the defensive week. Google is gonna fight the 378.56 next week. So we're gonna watch this one really close. Okay, so it closes at, this is a leader, keep in mind, in the Mag 7. But if this thing flips, it's gonna go down to this one. Okay. So next week, Google needs to take out 378.56 because it has one and two lower lows now. Apple has only one on the top. Google, no, the Nvidia. Okay, Nvidia is. Oh no, this is the higher bar inside. Amazon, you see? Look at that. One down week, second down week. Look at the third week, up. I'm telling you, Mag 7 stocks on a third week, when it comes to the defensive week, they fight as hell just to save the weekly swing, because they don't want to give up that 3 weeks of lower lows. Meta, nasty. Look what they did to Meta, and I'm gonna shut it off. Look at the Meta, man. How dirty they play that thing. Unbelievable. I watched it. I was like, wow. Watch this. Meta monthly swing is down, right? Because it has 3 weekly lower lows. One low, two lows, three. So the weekly swing, the line turns down, correct? You see that. So last 2 months, what Meta did, Meta put a higher bar. Last month, it ended the month with the inside month. That makes it 2. This week, look at the high. 642. Look at the last month high, 643. They stopped the high by one single point, just not to flip the monthly swing back up. And what they did yesterday, they came up with the fake news, right? That the Meta is selling shares to raise cash like Google. And then the company after that denies that. They said, like, we're not doing that. That's a fake news. And look what they did. They flushed it out this low. And now they put a lower monthly, but now it doesn't count. It had a very good chance of flipping this thing back up like this, but it didn't. But it took out the low now. See? Now the yesterday low was 582. Last month low was 592. Now after this, you need 3 weeks. If there is still possibility, because this hasn't closed yet. In the next 3 weeks, okay, because the close is not official yet. If the price reverse takes out this 643, this bar will engulf like the blue one. Then the monthly swing will flip. So there is a chance there's plenty of time as well. It needs to get from here. Right now is at 593. It needs to make a move in the next 3 weeks back to this 643. This number right there is gonna flip the swing back up. Right there. Okay. On a weekly, it's still it's possible. Anything can happen. You know, but what are we looking at structure wise? Structure wise, swing is down. RRG is in a tier 4. Money flow is completely flat. Okay. We just don't have positives on this, you know? So it's not something I want to attack, to be honest. Up 3 weeks, down 7 weeks. B7 by 15.7 against 32.9. So spending more time to the downside, you know? So we'll see. Anything can happen. It can reverse. It needs 643 this month by the end of the month, by the time the candle will close. See, Microsoft made it this month. See, Microsoft was down for sideways for a very long time. So now this month right there, it managed to put up a higher bar. So now the monthly swing flipped. Look what they did. They kept the stock sideways for 6 weeks, give the breakout for 1 week basically. Then this got a little bit more upside. Then we took a sharp reversal lower this week. You see? The problem with Microsoft is this. You see the curve? That's why it's going to have a very hard time going up. It needs a Hurst reset. The only way the reset is going to happen when the price is going to advance. You have a massive reversal, the move, and then you have a full washout. That's the problem with that stock. And then you see the entire cycle trend was to the pointing to the upside. Look, the bend that it took the last couple months. You see? Why you think that I exit those trades? I've taken multiple trades on Microsoft so far. Because I know I'm gonna take something. I will sit in here for some time, and then we played this breakout. It's still on the upper side, but you look at this. This is why I'm not too convinced that Microsoft really gonna rip to the upside. You need to study the chart right to see where you are on the cycle. See, just have that now. If you look at the Microsoft, the Apple, see, rip into the upside. Look at the difference. It just kind of went sideways because the price was sideways for a long time. It just got the expansion to the upside. This is a very picky market. I'm going to shut the video off. Okay.